taking it to Excel, I would prefer to solve it here. These are short, simple questions. We don't need long calculations, so we are not going to Excel. First of all, I'll read what is the requirement. It says, what were the consolidated retained earnings of Mercedes Group at 31st March 2009? Okay, so Mercedes company has owned 100%, so there is no NCI, of Benz company since incorporation. At 31st March 2009, extracts from their individual statements of financial position were as follows. Mercedes company share capital 100,000, retained earnings 450, Benz company 50,120. During the year ended 31st March 2009, Benz company had sold goods to Mercedes for 50,000. So Benz is selling goods to Mercedes. By the way, I don't bother because it's 100% ownership. There is no NCI calculation involved here. So it doesn't make difference for me now. So Mercedes had sold goods to Benz had sold goods to Mercedes for 50,000. Mercedes company still had these goods in inventory at the year end. So which means all of the goods are still in inventory, 50,000 worth of goods. Benz company uses a 25% markup on all goods. Remember, now we did before markup and margin. So first thing we need to calculate, we need to see how much was the profit inside. Because it is a case of markup and because it is 25%, so 25 divided by 125. Can somebody do it? I can do it. 25, it makes me 5.
10,000.
So 10,000 is my total intra-group profit. And all of the goods are in stock, so all of that is unrealized. If they tell me that 50% of the goods are in stock, I would have taken 50% of 10,000. But all these goods are in stock, so I'll take all of that now. Now I know that if I have to do group retained earning, very simple thing. So this is not, I don't need this actually. What we need is 450,000 plus 120,000, adding together. So it makes me 570,000. The total profit is 570,000. Just like in our previous question, we were doing 35 plus 20. So that was, 55. But then what happened? We subtracted 2. That made us 53. So same thing we'll do here. My total profit is 570,000, individual total of 2 companies. But inside of that, there is some intra-group profit, unrealized. Subtract that thing, answer is 560. That's all. Yeah. Okay. 26.11. I want you people to read the question. I'm giving you 2 minutes. You read the question. So we have got here. I think someone's video is on. Half is your video is on, I think. Okay. What we need to do is very simple. Person 330. Caller company 300. So individual total makes me 630. This is the total of individual. And from here, I need to subtract the intra-group, the unrealized profit. So how much is there? So person company sold goods to Caller for 30,000, including a profit margin of 25%. So which means that I will simply take 30,000 into 25%, and that makes me 25, 7,500. This is the total profit. This is the total profit on intra-group sales. 40% of these goods were still in inventory. So I take 40% of that, and this makes me 10, 7, 15, 3,000. So 3,000 we have to subtract. So subtract 3, answer should be 627,000. This is unrealized profit, PUP, okay, 3,000. So 627 should be the answer. Quite simple question. We move into one more. This is question from Goodwill. I think we did this thing together, Breckspear question. We did it together when we were doing this thing. Tangible non-current assets, I don't need it. I need questions for value of non-controlling interest. Let's do this question, NCI question. Together we'll do it, okay? So it says, Donna company acquired 80% of the equity share capital of Blisson on 1st January 2004, when the retained earning of Blisson company were 40,000. At the time of acquisition, 40,000. The fair value of non-controlling interest at this date was 25,000. So opening non-controlling interest was 25,000, because the question says value of NCI. So I know that value of NCI means that NCI at acquisition plus NCI's share in the post-acquisition retained earning. At 31st December 2004, which is the end of the year, the equity capital of Blisson company was as follows: share capital 40, share premium 10, and retained earnings 60. So before retained earnings were 40,000, now retained earnings are 60,000. So how much is the change? How much is the change? If I see that the change in the retained earning is 20,000. So if there is no intra-group transaction, NCI can come and say that 25,000 I invested, and then post-acquisition is 20,000 profit, the change in the retained earning, 40 and 60, and I am the owner of 20%. So give me 20%, which makes it 4,000. So my share is 29,000. They could have said that like this one. But this is only true in the absence of intra-group transaction. But we see that there are some intra-group transactions. So let's first see what are the intra-group transactions. Who is selling to whom? Listen, if the parent is selling, then NCI can still claim 4,000. Whether there is intra-group, there is no intra-group, NCI is not bothered. But if the subsidiary is selling, then things will change. So let's see who is selling. During the year, Blisson company sold goods. You see, subsidiary is selling goods to Donna for $20,000. So if subsidiary is selling, then I need to adjust subsidiary's profit. And after adjusting subsidiary profit, then I will give share to NCI. This price included a markup of $12,000 for profit. So I don't need to calculate. They already told us that $12,000 was the total profit. At 31st December, 50% of these goods remained unsold in the inventory of Donna company. So 50%. So this is the total profit. Unrealized profit would be 50%, which makes it 6,000. So $6,000 is the unrealized profit, okay? Unrealized profit. And where this unrealized profit lies, it lies in the subsidiary's profit. So I would say that, overall, post-acquisition change. Post-acquisition change is 60 minus 40. So $20,000 is the change, which we calculated before as well. But out of this 20,000, 6,000 is unrealized. So I subtract the 6,000 and 14,000 is the profit that we can distribute. And then from this 14,000, 20% goes to the NCI. So NCI is going to take only 2,800, not 4,000, but 2,800. I add 2,800 here. So NCI total is 27,800. Answer should be B. Are we clear on this thing? Any question you have, please ask me. No question? Okay. I assume that there are no questions. I'll move forward. These are simple things. Okay, 2621. Let's do one more thing. What is the parent company's share of consolidated retained earnings? That should be reported in the consolidated statement of financial position. Consolidated retained earnings. Volcano company acquired 75% of the equity share capital of Lava company on 1st September 2003. The retained profit for the two individual companies at the beginning and end of their financial year were as follows. So retained earnings on 1st January. This is for 31st December 2003. Remember, you acquired on 1st September 2003. Acquisition happened on 1st September 2003. Financial statements are for 31st December 2003, which means September, October, November, December. So actually, if you see that Volcano, this is the parent, their opening retained earnings were 596 and closing retained earnings are 650. So they made a profit during the year of 54. If I think like how much profit, like the change in the retained earning, I can assume that this is because of the profit. 54. Lava company 264 to 336. The change, their opening retained earning and closing. So how much profit they are making? The Lava company, this company, sorry,
72,000.
72,000. But the 72,000 is for the full year. We are consolidating only 4 months. We do not have a right because we purchased 75%, but we do not have a right of 75% of 72,000 because we are only joining them in the last 4 months. So 72,000 divided by 12 multiplied by 4. So if I take like this, it makes me 3 goes 24. So 24,000 is the profit which we are talking about, right? 24,000 is the profit which we are talking about. So we say, what is the parent company's share? And now it says, so if you talk about this 24,000, this actually will go to group retained earning. If they ask you, how much is the group retained earning? If they ask you, how much is the group retained earning? So group retained earning is always, you call it like parent retained earning plus parent's share in post-acquisition retained earning of subsidiary. So parent retained earnings are 650,000, and parent share would be 24,000 times 75%. What does that make? Can somebody tell me? 24, 6, 18, right? 18,000. You might be thinking that the answer is 668, like this one, but this is not the answer because they are not asking you group retained earning. What they're asking you, actually 24,000. No, I did it correct. Actually, this should be like this. If I'm sorry, if it had been, okay, I'm sorry, I explained it correctly, but I explained it vice versa. Let me just, if you ask what is the group retained earning, what goes to the group retained earning? So group retained earning, this is already we have calculated 24,000. This is the parent share for the 4-month period. So I would have added 24 here, full 24. If they ask group retained earning, you should take full 24. But the question says, how much is the parent's share? Parent's share. So that is what they're asking, parent's share, parent's company share, and that should be 650 plus 24 into, because parent is 75%. You take 18, so 673. Answer is 673 actually. 678. I'm sorry, 668. 668. This should be the answer. Because for the parent, I would take 75% share, 18 I'm adding. If it had been the group, I would have taken the full 24. For the group, I would take full 24. But for parent, I will take 75%. Are we clear? And that's why they actually have given you this answer B also. If you see that 674, this makes 674. So just to confuse, they give you both answers. But because the question says parent company share, I'm talking about 75%, and 75% is 18. So 688, 668 should be the answer. Okay, then comes this next question, 26.22. This is going to be our last question for today from this small section. Tin company acquired 90% of the equity share capital of Drum on 1st April 2003. The following information relates to the financial year at 31st December 2003. So it makes 9 months acquisition. You've got 9 months period of acquisition, post-acquisition period. Retained earnings 840, profit for the year 79, 10, whatever. Now, in this question, what it says, please pay attention. What profit is attributable to the parent company? Here it says, what is the parent company share of consolidated retained earnings? Retained earnings. Here it is saying attributable to parent company, what profit? Now, retained earning and profit are two different things. Because it said retained earning, so I took the full retained earning of the parent 650. From subsidiary, I only take post-acquisition 80 in the previous question. In this question, I'm not going to take 910. Like apparently it looks like that tin company has 910. So just like we did before, let's take from parent 910 and then take from subsidiary. But we will not do like this because they do not ask us retained earning. They are saying profit. Profit is always for 1 year, my friends. Profit is something which is for 1 year. So for the parent, and I'll say profit to make it clear, tin company profit, that is like 70. I'll take full of that. But from Drum company, this is 60. But we have got only 9 months starting from April till 31st December. So divided by 12 multiplied by 9, it makes me 12, 5, 5, 9, 45. So 45,000 we have to take from here. This 45,000 is full. We are not interested in full because it says parent. So 45,000 full, parent is only 90%. So I'll take into 90% of 45,000. How much it makes 10? Sorry?
40,500.
40,500. This was 70,000. And I put here 40,500. And that makes me 500, 0, 1, 1. 110,500. This should be the answer. Are we clear? I did not start with 910. If they ask me what is the parent's retained earning, then I would have done 910,000 and added this 40,500. Then I would have done. I will take 910. This number would remain same, provided they ask me retained earning. They don't ask retained earning. They say profit. Profit is only 1 year thing, which is 70. So we start with 70. Okay. Let me see if there is anything related to. Yeah. Sand company 26.23. Let's do one more. These are, I mean, they take little time, but they actually give you little concepts which ultimately help you in making the big picture in mind. So Sun company acquired 80% of the equity share capital of Sun company several years ago. So it's not 1 year. Post-acquisition period is not 6 months or 9 months, many years. In the year to 31st December 2004, so full year, Sun company made a profit after taxation of $120,000, and Sun company made a profit after taxation $35,000. So if I have to consolidate, two profits look like this: 35 and 120. During the year, Sun company sold goods. So subsidiary is selling to parent. Sun company sold goods to Sun at a price of 40,000. 40,000 is the value of goods. The profit markup was 40% markup. If it says markup, so it means that into 40 divided by 140 on the sales price. That's a mistake in this question now, I remember, because it says two words which are conflicting. It says markup and it says on the sales price. Now, these are two conflicting situations. We know markup is always on the cost price. Markup can never be on the sales price. This is a typing mistake in the book. So either it should be a markup on cost, or it should be a margin on sales price. So I think this is a margin of 40%. Why do I assume it? Because generally when you see the numbers, when you will calculate, this number will come very strange, like point, I don't know. So that number would not give you a reasonable answer actually. I mean, mostly these are very, how to say, whole numbers or rounded numbers. So I remember that it was, if I'm not mistaken, it was margin thing. So I'll just take 40,000 into 40% because I'm assuming it is margin. So that means that total profit was 16,000. At 31st December, 25% of these goods were still held in the inventory of sand on the parent. So into 25%. So unrealized profit is 4,000. 4,000 is my unrealized profit. And that lies within the sand company because subsidiary sold goods. What profit is attributable to the parent company in the consolidated statement of profit and loss for the sand company, sand group, for the sand group? Now, this is 35,000, their total profit. I cannot take 80% of 35,000. I can't take because this 35,000 includes the unrealized profit. So first I subtract the unrealized profit, which is 4,000, attributable to the parent company, which makes me 31,000. And then 31,000 is the total profit, out of which 90% belongs to the parent. What number do we get?
80%.
Sorry, 80%. How much it is?
24,800.
24,800. So we remove this number and we put 24,800 here. And we get 144,800. This is parent's share, 144,800 B. Anything you want to ask? Okay.